Welcome to Pyle's Podcast, a weekly discussion of economic and market developments as they pertain to you, the client. This podcast is for information purposes only, and the author has taken all usual and reasonable precautions to determine that the information contained has been obtained from sources believed to be reliable.
Podcast for January 15th, 2009. Northern Telecom. Once upon a time, 25 cents bought you a cup of coffee. Not anymore, even with the past year's drop in bean prices. But the close of trading on Wednesday was enough to get you 2 shares of Nortel Networks. Now forget those dreamy days back in the year 2000 when the stock fetched $1,200 on a 10-for-1 consolidation adjusted basis. Folks were still buying this company a year ago when it was trading near $14. The announcement that Nortel had filed for bankruptcy in the U.S. shocked the market. Yet it almost feels as though a weight has been lifted, like the passing of someone who has suffered long with a critical illness. Indeed, following the subsequent statements that Nortel had also obtained a court order for protection under Canada's Companies Creditors Arrangement Act and similar protection in the UK and Europe, the press started to fill up with obituaries. According to the official website, such columns are premature, as the company is, quote-unquote, still very much in business with an unwavering commitment to customers. This, of course, is not the first time customers and investors have heard this line, though it might turn out in the end to be the last. I'm not going to spend time reviewing the past glory of Nortel and its history, nor chronicle its journey into the abyss. And I'm not going to get all teary-eyed like some of the reports out there. Don't get me wrong. With any firm that goes through a restructuring or goes belly up, there are personal tragedies, from job losses to the evaporation of net worth from the collapse in share prices. The hopes are that these individuals bounce back over time, and in terms of displaced workers, there is certainly an onus to provide as much incentive and support for retraining and reemployment as possible. While we should certainly be upset over the real personal effects from this corporate failure, and that a once proud Canadian company might be laid to rest, how many times in a day do we stop for a 2-minute silence to remember the once mighty Hudson's Bay Company? Personally, my childhood memories of shopping in the department store chain have been replaced by the more relevant recollections of how lucrative short-dated Bay bonds became just before the last gasp of air. I have since learned to shop in other department stores when forced to, of course. My point here is that companies with strong legacies deserve to be talked about if they continue to remain strong and well-managed. Nortel isn't in that camp. Sure, we can argue that some of what happened to the stock following the tech bubble implosion was linked to its involuntary euphoric rise, and how the company became larger in terms of its weight in the TSX than any single sector since. Its market cap in 2000 at over $300 billion was larger than some major central banks have in foreign reserves. Some of the hype was real in terms of Nortel's penetration in an internet-fed connectivity expansion around the world, while the rest was just, well, hype. But it wasn't the only company to see its bubble burst. Competitor Cisco Systems tracked Nortel fairly closely into the spring of 2001. However, from that point on, Cisco never traded much less than about 12% of its March 2000 peak, whereas Nortel flopped to essentially 1% by the fall of 2002. The difference? One company had a tattered image that was still marketable to investors because of relatively strong and robust governance. The other did not. Accounting irregularities, investigations, settlements, and a CEO revolving door contributed to a meltdown in investor confidence at Nortel. In fact, it's still unbelievable to this day that the stock was able to pull off the miracle rally from 2002 to 2004 that it did. From an adjusted low near $5 in October 2002, Nortel soared to a high of $113 in February 2004. This week, the ride ended, and Nortel fell to a weighting on the TSX of 0.006%. Higher than only one other stock on the index, everyone's darling this past year, Oil Exco. Wow, even General Motors has a weight of 0.03% on the S&P 500. Yet that hasn't prevented talk of a gulp handout by Ottawa in support of Nortel. After commenting that the federal government would monitor Nortel's restructuring closely, Industry Minister Tony Clement finally announced that there will be indeed $300 million in short-term aid provided. Remember what I said last year about the dangers in feeding one sick pig? Others quickly run or hobble to the trough to get some. The more you throw out, the more will come. There are two government spins behind the handout. One is the importance of the telecommunications industry to Canada's economy. The other is the fact that Nortel is still the de facto largest producer of telecom equipment on the continent. Let's deal with the first. Yes, telecommunications is important, but its share of manufacturing is not massive, and manufacturing itself is a declining share of overall economic activity and employment in Canada. As for supplying North America, there are other producers out there, Cisco being just one of them. And a lot of Nortel's actual manufacturing is handled by other firms. I'm not going to speculate on whether or not Nortel's restructuring process will be successful, nor how much the government, including the Export Development Corporation, is willing to ante up to keep the life support going. I will say, however, that the cream of the tech sector still rises to the top, whether companies or talent, and that the disappearance of Nortel will not mean an end to the telecommunications innovation, nor necessarily equipment production in Canada. Like shopping in a store that carries a different name than HBC, we might find that the most appropriate and efficient outcome will be for assets and resources to emerge under a new name in the telecom sector. I'm Andrew Pyle, Wealth Advisor for Scotia McLeod. Have a wonderful and prosperous week.
The opinions stated are not necessarily those of Scotia Capital or the Bank of Nova Scotia. Scotia McLeod is a division of Scotia Capital Inc., member CIPF. Feedback or questions on this audio can be sent to podcast@andrewpyle.com.